Hi everybody, this is Lara at pureelliottwave.com. I have a firm launch date for you, or publication date, for my video course and book, Learn Pure Elliott Wave. It will be published on the 1st of November, and for the first 48 hours I'll be offering $100 off for the video course, so it'll be at $195 for the first 48 hours, and I'll always bundle it with the book because they kind of go together. So I'm going to take a look at Ethereum today using Elliott Wave and classic technical analysis. I've just updated my data for Ethereum. I haven't updated my charts. I'm going to go through that process with you and show you the thinking process that I go through when I update a wave count, and a little bit of mucking around with motive wave to make the charts look right as I think about what's happening here. I don't think I want to put D there, that's too brief. Okay, my first or main wave count for Ethereum has been considering a sideways triangle for primary wave 4 is unfolding. I'm going to accept primary 3 over for Ethereum, although I haven't for Bitcoin. They do have a slightly different wave count. The correlation coefficient between these two markets shows that they are most commonly positively correlated, but that does sometimes break down, so they can have slightly different wave counts. The bigger picture for them is both the same, but the corrections within the impulse could be at different times, different wave degrees. Within cycle wave 1, I notice that primary wave 3 is 19.36 times the length of primary wave 1. And within primary wave 3, intermediate 3 was 18.24 times the length of intermediate wave 1. So if primary 3 is over here, that means that it's 15.27 times the length of primary 1, and that's reasonably close to this figure in this figure. So that's okay, this is acceptable. So for Ethereum, I've got a couple of wave counts, and the first one is going to consider a regular contracting or regular barrier triangle. Could be unfolding sideways. Let's look at it at the weekly chart level. I'm going to expand this out, and what am I viewing this on? Semi-log scale, yeah. I'll view my daily charts on an arithmetic scale and weekly charts on a semi-log scale. Let's move this all over. I want to put my AC trend line here, and I want to bring E up here, and C wouldn't be over, so this could be, let's get some labels for C in here. What this bounce could be wave B with an intermediate C, and it could be testing the BD trend line. But the first thing I notice about this now, it doesn't have the right look in regarding the triangle trend lines. Elliott wave triangles or contracting triangles should have trend lines which are strongly adhered to. They should strongly provide support and resistance as the triangle unfolds, but also they should be converging, quite obviously converging. For a barrier triangle, the BD trend line should be essentially flat, and that means the AC trend line should have a slope. It should be looking like this, but if I pull it up here, there's an overshoot here. It's acceptable, no rules are broken, but for the triangle to have a really typical look, C should be down here. So I was expecting the BD trend line to have a bit more of a slope, but if it's tested here, it's now not really sloped much at all. This is not looking right. Okay, so let's just quickly fix these little labels. Let's go over to the daily chart level and look at this triangle. What are you doing, motive wave? Yeah, I'm viewing this on an arithmetic scale. A lot of my time in preparing charts is just mucking around like this, which is annoying. Okay, let's expand this back out so I can see what's happening here. I'm going to expand this and focus on B and C. Okay, so if D is going to be here, C is going to sit along here. I want this to sit so that it sits here. This is too deep for X. I don't think this wave count's right anymore. Okay, I think maybe the alternate's more correct for Ethereum. Let's have a look at the alternate. Okay, yeah, this is now looking more right. Okay, my weekly chart should be on a semi-log scale. Let's expand this out. Look at all of cycle wave 3. So price is behaving more as expected for the alternate, and this fits also with the Bitcoin analysis. This is another reason why I consider this alternate. So this alternate sees, let's just quickly jump back to the monthly chart to put this in context. Elliott Wave is fractal. You have to have your wave count fitting into a higher degree. You need to be looking at monthly or quarterly chart data if there's enough data to do so. For Ethereum, it fits perfectly at the monthly chart. Starting here, August 2015, my wave count starts from the low in October 2015. From this low to this high, I'm counting this as a complete 5-wave impulse. From this high to this low, I'm counting this as a corrective movement, a counter trend movement for cycle wave 2, subdividing as a double zigzag, and from this high on upward I'm expecting a third wave. Its cycle degree has begun. So I'm going to change this now to fit with the alternate, and I'm going to relabel this. Let's get some labels in here, and I'm going to swap the labeling of my main and alternate wave counts over at lower time frames. Let's bring that up here. Here's a useful feature of motive wave. It's telling me that my fourth wave is overlapping first wave price territory. This little yellow exclamation mark is a handy little check for me to make sure I'm not breaking Elliott Wave rules. You'll find if you pay attention to my Elliott Wave analysis, I'm very careful to follow all of the rules as laid out in the classic Frost and Prechter Elliott Wave principle all the time. Always amuses me when some people come into comments and tell me I've broken a rule. The last one was a leading diagonal should subdivide 5, 3, 5, 3, 5. Nope, that is not what the book says at all. I always meet all of the rules all the time. Okay, that's going to be an alternate. So at the monthly chart level, we've got cycle 1, cycle 2, within cycle 3, primary 1, primary 2, and now the main wave count's going to have within primary 3, intermediate 1, intermediate 2. So this is a really bullish wave count for Ethereum. It's got a third wave at 1, 2, 3 very large degrees in its really early stages. So this is going to be the new main wave count. Let's squish that up. And I'm viewing this on an arithmetic scale for the daily chart. I'm just going to look from the end of intermediate 2 at this time frame. So how much of minor wave 3 could be complete would be the next question. And do I need to move my invalidation point? Let's get some labels in minor wave 3. Okay, first of all I want to check this low. What's this low? I'm reading the numbers from down here. So the low on this candlestick is 2747.3376 and this one is a little bit below. Okay, so 5 up, 3 down to here. That's important. So minor 3 can only subdivide as an impulse. I think I want to put this here. I don't know that minute 2 is over yet though, because I can see a nice impulse here. Yep, this looks good. That looks really good. I'm just real quick going to bring in MACD to assist with the wave count. For this piece of movement here, if this is the third wave, it has strong momentum. This is the fifth wave. Cryptocurrencies behave similarly to commodities. Their fifth waves are usually stronger than their third waves. That's especially so for fifth waves to end third wave impulses 1 degree higher. So here MACD shows me that this fifth wave has stronger momentum than this third wave. But within the third wave, the histogram is the strongest. So this fits perfectly with MACD, this labeling. Now the next question is minuet 5 over here. I can see 1, 2, 3, 4, 5. I think minute 1 may not be quite complete. I'm just going to contract this a little bit so we have a little bit more room here. I'm going to get some labels in here for minuet 5. No, not there. Subminuet 4 may not be over. It could be continuing sideways as a triangle. I'm going to get some labels in here for minuet 2. That looks really good. Okay, so within minute wave 1, I think we have minuet 1, 2, 3, 4, and minuet 5 looks incomplete. Minuet 3 is extended, you can see its subdivisions at a higher time frame, and I think minuet 5 may also be extending. That's okay because minuet 1 is not extended. Only 2 of the 3 actionary waves within an impulse may be extended, not all 3, and in this instance it looks like the 3rd and the 5th wave may be extending. So my invalidation point has to remain the same because when minute wave 1 is complete, a pullback for minute wave 2 should unfold. It should last at least a few days. This one here lasted 13 days, this one here lasted 14 days. So I'll expect minute wave 2 here could last 2 to 3 weeks, a pullback. And I will expect it might actually not be that deep. A strong upward pull from a 3rd wave at multiple degrees may pull this upcoming 2nd wave up, and it might not be as deep as 2nd waves for this market usually are. This one here, let's do a quick calculation. How deep is this? This is really deep. This is a 98% correction of minute wave 1. That's actually pretty typical, within a pretty typical range. I'd say in the 80 or 90% range for 2nd waves for cryptocurrencies is pretty normal, but not always. Not always. Sometimes, particularly as you get toward a big 3rd wave, they can be more shallow. So I'll look out for this one to be more shallow, but lasting at least 2 weeks, possibly 3. About 2 weeks. Yeah. Okay, so that is my analysis, my Elliott Wave analysis. Let's take a look at some classic analysis for Ethereum now. At the weekly chart level, Ethereum is in a huge consolidation with really strong support about 1700, resistance above at the prior all-time high about 4380. These 2 candlesticks here on the weekly chart have bullish long lower wicks. This last completed candlestick, which is up to the end of Sunday's data, has weaker volume. That's okay, because when you look back at the price history of these cryptocurrencies reasonably early on in a new trend, they don't always have support from volume. Here's a good example. Here's a couple of candlesticks which had much lighter volume in previous downward movement. In fact, all of this upward movement has lighter volume than this previous downward movement, and yet it's gone on to make new all-time highs. So just because volume is light at the start of a bullish run for these particular markets doesn't mean there's no bullish run developing. I've learned that one the hard way. Also, looking at this, here's a gravestone doji. This is a bearish candlestick, and it has much weaker volume than the prior downward candlesticks. The lows for these markets are really hard to identify. The highs, well, none of this is easy, but the highs are a little bit easier than the lows. The lows are really difficult. On balance, volume still has a range. I've adjusted my support line a little bit. And here's the resistance line drawn across these highs. On balance, volume is still constrained. We should still be looking for a breakout. An upward breakout would be a reasonable bullish signal because this line is now quite long held. It's got 1, 2, 3, 4, maybe a 5th test coming up. So at least 4 tests. So that's got reasonable technical significance now. At the weekly chart level, ADX is increasing, telling us there is an upward trend. It's extreme because it's above both DX lines, but nowhere near as extreme as these markets can develop. It can get over 60 here, it did. RSI neutral territory, there's plenty of room for this upward trend to continue. Stochastics entering overbought, but we use that when the market's consolidating, not when it's trending. ADX says it's trending. For confidence, I'd want to see a breakout by a close above resistance. That's at the daily chart level, not weekly. If we see that, I'd have more confidence in this trend for Ethereum. So this supports a bullish Elliott Wave count. Here's the correlation coefficient between Ethereum and Bitcoin. Most of the time they have a pretty strong positive correlation, but the data using this mathematical test of correlation, the data shows that the correlation between Ethereum and Bitcoin is not reliable. Here it broke down to zero correlation. They are again currently positively correlated quite strongly, it's 0.94, but the data shows that cannot be relied upon. That could break down at any time. What about the daily chart? Let's take a look. We have a bullish candlestick pattern of this low, does not have support from volume though. A little bit of concern there, but again, these markets don't always exhibit support from volume early on in a bull run. So it's a pretty strong bullish engulfing candlestick pattern. We're getting upward movement here. ADX is at the moment declining, indicating no clear trend, but if it does turn upward again, the positive DX line is above the negative, ADX is above 15, so if it does turn up to have a positive slope, it would again indicate an upward trend at this time frame. At the weekly chart level, it is indicating an upward trend. It's a lagging indicator. It's based on here a 14-day average, and these downward sessions within this upward movement are pushing ADX down. That's okay. Again, I want to see a close above resistance before I have reasonable confidence in an upward trend for Ethereum. But it does look like there is an upward trend developing. On balance, volume here has a weak range. In terms of volume, we're getting some upward movement here, and there is some increase in volume, and here to here, and here to here, and here to here. And these upward sessions here have stronger volume than the downward sessions mixed in amongst them. So I would say that the short-term volume profile is bullish. We've been over on balance volume. This resistance line doesn't have reasonable technical significance. It's got too long a slope. It's not long, sorry, too strong a slope. It's not long held. It's only got two tests, and likewise the support line. So this is a very weak range. The range for the weekly chart is much, much stronger. I'll be looking for a signal there. Been over ADX, RSI's in neutral territory, and stochastics returning to neutral territory. So if at this time frame the market is not trending, stochastics has reached overbought, that would tell us to expect a pullback down to support somewhere perhaps around 290, 2900 or 2650, a little below that, before we possibly see a trend develop. So that would be a short-term pullback within the larger upward trend at the weekly chart level. So that essentially fits in with the Elliott Wave count. Let's just quickly go back to that. I'm expecting a little bit more upward movement to complete this impulse, and then a pullback coming up pretty soon. Sooner rather than later possibly. And it should not make a new low below 2676.4077. So it might find support about 2900. Maybe a little bit above that. I could actually put another horizontal line in across here, about 3,400. I should add that in. So I'd look for support about 3,400 in the first instance. If that breaks down, 2,900. But overall, an upward trend for Ethereum looks about right. Okay, that's it from me. I'll be launching that Learn Pure Elliott Wave video course on the 1st of November. If you want to be notified in time to get that extra special price, get $100 off, go through to my website. I'll put a link below in the description box, and give us your email address. When I have notified you of that launch and it's done, I'll delete that email list because I hate spam. Thank you so much for watching.